The president of the African Development Bank, Dr. Akinwumi Adesina, is advocating agriculture lending through risk-sharing models as already tested in a few African markets. The advocacy formed part of his speech on the use of applied economics to improve lives and livelihoods at the Conference of Agricultural and Applied Economics Association in Washington, D.C. Let's take a listen.
In my mathematical programming models, I used to enjoy optimizing the profit of farmers, subject to a series of constraints, including finance. There was no doubt that relaxing the credit constraints always led to higher technology adoption and profit. This was all nice and tidy. But there's a world of difference between the models and the real life. Getting bankers to lend was much tougher than setting up my mathematical programming models. Limited access to finance and high interest rates have continued to hamper the development of agriculture. Agricultural development banks set up to address this in the past have been colossal failures due to elite capture, poor business models, lack of understanding of agricultural value chains, and non-sustainable subsidized interest rates. Commercial banks, awash with liquidity, rarely lend to the agriculture sector, and when they do, the interest rates were extremely high, while the credit duration is short, leaving the sector without access to affordable long-term finance. At the core of the problem is perceived high risk of lending to the agriculture sector. New innovative approaches were needed to de-risk agricultural lending. This led me, while at the Rockefeller Foundation, and later at the Alliance for Green Revolution in Africa, AGRA, to work on models for de-risking lending by banks to the agriculture sector. Using forced loss guarantees in many countries, we succeeded in leveraging commercial banks to ramp up lending to the sector, including in Kenya, Uganda, Tanzania, Mozambique, and Ghana, among others. Those successes led me to use similar instruments in Nigeria, where I had to engage with all commercial banks, together with the governor of the Central Bank of Nigeria, between 2010 and 2011. In Nigeria, we developed the Nigeria Incentive-Based Risk Sharing for Agricultural Lending, otherwise called NIRSAL, or simply put, NISAL. It was designed to reduce risk of lending by fixing the agricultural value chains and also the financial value chains. A risk-sharing facility of $350 million was established to help to leverage the banking system to lend to farmers and agribusinesses. It was a huge success, leveraging $3.5 billion in lending commitments. The share of total bank lending to the agriculture sector rose from 0.7% when we started to 5% of total bank portfolio in agriculture over a 4-year period. Non-performing loans less than 1%, an achievement that has continued. One of the major reasons that the system worked was that it was based on encouraging lending all along well-defined agricultural value chains. If banks lend to cassava farmers, for example, they also lend to cassava processors, connecting the farm to the agribusinesses and markets. The development of agricultural value chains helped to significantly reduce the transaction costs and risks embedded in those chains. Consequently, it became easier for banks to lend to fixed agricultural value chains, creating a closed loop. Today, NISAL is a fully independent, non-bank financial institution. The African Development Bank is now expanding this model to several African countries. And just 1 month ago, we established the system in Togo, following similar launches in Ghana, Tanzania, Kenya, and Liberia. I always say, where will I be without my wife? And we have debates all the time about developmental issues. She always reminded me, Akin, the role that corruption plays in not allowing optimal solution to emerge should never be underestimated. My models did not factor in corruption. Otherwise, how could we explain why technologies languish on the shelves across Africa, yet farmers were not able to access them? There is no question that Africa can and Africa should be the breadbasket for the world. After all, 65% of the uncultivated arable land left to feed 9 billion people in the world by 2050 is in Africa.